Hi, I'm Rick Albert, and welcome to The Key to the City of Angels, the podcast where we unlock the secrets of Los Angeles real estate. With over 300 real estate deals under my belt, I've seen it all, from house hacking strategies that build wealth to helping clients close multi-million-dollar deals in one of the most competitive markets in the world. Every week, I'll bring you expert insights, market trends, and inspiring success stories to help you navigate the LA real estate scene. Whether you're a first-time buyer, an investor, or just curious about what it takes to thrive in the City of Angels, this podcast is your guide to making smarter decisions and achieving your goals. So grab your keys. It's time to unlock your path to prosperity in Los Angeles real estate. Hello, everyone. Rick Albert here with another episode of The Key to the City of Angels. Super excited. I'm here with Aaron Letzeiser of Obie Insurance. Thank you, Aaron, for being here.
Thanks, Rick. Really excited to chat.
Yeah, I think this is going to be a really interesting conversation because short of it is California's in a shit show when it comes to insurance and the fires didn't help. So we can talk about that and talk about what your clients are doing, both on the homeowner side as well as the investor side. But I always like to start with saying, Aaron, how did you get into insurance? What made you passionate about it?
By accident, actually. Started, as I think is the way that a lot of people fall into insurance. My experience prior to starting this company was really much like probably you and most of your listeners, right? I was buying home and auto or renters insurance coverage or coverage for real estate investment assets, and started the company now close to a decade ago with my brother Ryan. His background was real estate private equity. He was buying and selling hundreds, if not thousands, of apartment units in certain markets around the country. I had participated with him in a handful of these deals, and really just came to find out that insurance for real estate investors, especially the SMB real estate investors, which is a majority of the 17 million individual small and medium sized real estate investor in the country, they really didn't have a lot of good insurance options. And it was 8 to 10 years ago. If you're in California, you're in Arizona or Southeast Texas or Florida, right? Like the different hotbeds of the real estate investor geographies over the last several years, it's only gotten worse since that point in time. And so Obie was our response to that. We naively came into insurance and wanted to build the right product for property owners and be able to service their needs across the country.
Okay, nice. The biggest thing I'm getting from all my clients and friends is like they're getting cancellation notices. Mostly actually on the investment side, right? Safeco is like canceling a lot of people. The famous one is State Farm, right? They just left. To break it down, why are they canceling? Versus if they've never had a claim on the property, why cancel? Why not just keep collecting the paycheck?
Yeah, it's a complicated issue, especially in a state like California, right? So I would say the first piece, is really there are carriers, and each carrier has a finite amount of what we all call capacity, right?
Mhm.
This is having enough risk capital on the balance sheet to be able to always pay out claims, right? And that's important in insurance. You want to make sure that your carrier is solvent, they're able to be there and show up when you need them to be. And so the first reason where especially your real estate investor clients might be getting an impact is that some of these carriers are saying, listen, that's what's known in the industry as an accommodation product. It's not home and auto. And the big commercial carriers, they don't really focus on this small to medium-sized real estate investor, the accidental landlord. You've got your home and auto and maybe a couple of rental properties. Maybe one of them was originally your house, and you accidentally fell into becoming a landlord. But those big commercial carriers, they don't focus on this segment, even though, even as myself, as a real estate investor, I consider myself a business owner. And so it's really all those personal lines insurance carriers, the ones, the household names, the one buying Super Bowl ads. And they're really reallocating that capacity to their primary products, which for most people are their homeowners products. So you might see carriers in a state like California or Texas, Florida, or otherwise around the country where they're still offering home insurance to owner occupied properties. However, they might just be continuously thinning the herd on stuff that just really isn't their primary product. And for a lot of those folks, that's actually where Obie can come in and be able to support those national carriers to be able to do that. So that's why a lot of your investors are getting, I think, sometimes the short end of the stick. The broader issue is really just, I would say, unpredictable weather events combined with a really challenging regulatory environment, especially in California. California has limited, in a well-intentioned way, the ability to only increase premium by a certain percentage on an annual basis. And so if somebody comes in like a State Farm or a Travelers or a Nationwide and says, hey, listen, in order for us to stay solvent, in order for us to continue to remain and operate in these states, we've got to increase rates by 10, 15%. It's just what has to happen. We just had these terrible, tragic fires. We need to increase rate. Otherwise, we need to leave. And
Right.
too often, a lot of the response that they get is that, unfortunately, we got to keep you boxed into this very limited increase. And so, unfortunately, a lot of carriers have said, hey, listen, that's a lot of regulatory red tape. We're just going to leave the state altogether. And unfortunately, that leaves everybody worse off at the end of the day.
It's funny because that's the same concept with rent control.
Mm-hmm.
You're limiting
Exactly.
how much someone can make money. And so these investors are leaving California. They're investing in other states.
Yeah.
It's literally the same thing.
Yeah, you're exactly right. Now, a lot of insurance companies, despite insurance being a very interesting financial product and something that can be very lucrative, look at Warren Buffett and what he was able to do with Berkshire Hathaway, but the premium isn't always where people are making money. The margin for an insurance company, and something that I think gets lost sometimes in the discourse, the margin for an insurance company is usually pretty small, right? It looks very much from an investment perspective like a fixed income product, right? They're hoping that they're able to make some money on that float of that premium that's coming in the door. But the actual premium that's coming in should be fairly well calculated. So that way they're making a couple of points on the actual business to be able to continue to
Mhm.
operate. But most of that money is going out the door to actually pay out those claims. And so that's, if you're looking at a 7 or 10 or 12% rate increase in California across the board, maybe on average, it doesn't impact everybody the exact same way. But if the state's coming back and saying, hey, listen, we're just not going to let you do that, that puts a lot of insurance companies into a really difficult position.
Yeah. It really becomes just a business decision.
It does.
And it's like we actually talked about this before the show. So a lot of these big businesses, they have a ton of money. I'm very much a capitalist. I get it. But on the flip side, it's a business decision. They're not in the business to lose money. And if you have State Farm, which they said for every dollar, I think it was every dollar in was like a dollar 26 out. So it's like they came out with $5 billion. Yes, on the big scheme of things, they're probably going to be fine. But why? If there's an instant savings of $5 billion by not investing here.
Yeah. And you know what? The more risk capital that enters markets, right? We're seeing this a little bit in Florida finally. Fortunately, Florida has not gotten hit by a really terrible hurricane or multiple hurricanes in a single year in several years. Right. And so because of that,
Mhm.
risk capital is finally flowing back into the state. And this is what I would love to be able to see in California over the next several years, if there's some softening also in the regulatory environment, is you're finally starting to see more and more players re-enter the Florida market, both for homeowners and for rental properties. And so what that's doing is it's diversifying the risk across the state, across numerous dozens of insurance carriers, and that's actually driving price down. The free market with enough people that are in there is actually driving price down. If Obie was the only player in California, we're raising rates, not necessarily to make more money, but because if I have to insure you and your neighbor and then everybody else on the street, unfortunately, if that street has a fire or a tornado or a hurricane, all of those houses are going to be destroyed, right? And so that concentration risk, the fewer and fewer carriers that you have in a state, the more concentration that they're taking on. And so that price is going to continue to go up,
Mm.
right? And so insurance at the end of the day is all just balancing out that concentration risk amongst as many players in the market as possible. And that's ultimately what's going to drive price down.
I kid you not, I just bought a fourplex out of state. That was why my insurance wouldn't give me a quote. They just said we're already too invested in this market. Like nothing wrong with you, nothing wrong with the property. The property's great, but give us like 3, 4 months
Yeah.
and then come back and then get a quote. And I'm like, okay, the hunt is on because it's become such a hunt for
And
insurance.
that's what it is, right? There are, unfortunately, in this segment, I truly say unfortunately, right? Insurance is a market where rising tides really raises all ships, right? The more
Mhm.
availability, the lower the premium, the more that you're going to be able to cash flow on your investment properties, the more investment properties you're going to be able to drive and provide more available housing to the market that is severely under volumed, right? And so, in my view, the fact that you're going to have to go on the hunt now to find coverage, that's a tragedy at the end of the day.
So much work.
I hated it, buying insurance before I really got into this space. I still don't love doing my home and auto coverage in here, but I think taking the view that the more insurance carriers that are in a market and the more that we empower the actual buyer through that experience, so that way they really know what they're buying, they have a really good understanding of it, they have enough options on the market to feel really empowered about this the decision that you're making. everybody is better off as a result.
Yeah. So in an ideal world, from a business perspective, you wouldn't want to insure every house on a street. You may want to insure maybe a few houses in each neighborhood of LA, for example, right? Like
Correct. Yeah.
as from a business perspective.
Yeah. In an ideal world, right, there's millions of rental housing units across the country,
Sure.
tens of millions. If there were 20 houses on a block, I'd love to take one of 20, right? Maybe two of 20. But beyond that, I want the 20 other insurance carriers that are technically competitors of mine to also be taking on that other risk in that neighborhood. Everybody is sharing in that diversified potential risk that also allows insurance carriers to continue to stay solvent in the markets that they show up.
So for once, a company doesn't want to be a monopoly,
You,
right? Like
you,
for once.
yeah, not in property insurance. If but 8 to 10 months ago, there was a king of LA property insurance, and they owned 80% of that market. Like they'd be bankrupt right now based on what happened.
You're right.
You don't want that. And so I think if the more players are in a market, I think it drives more fairness into that purchasing experience, and the more that especially for real estate investors who feel like they're managing that P&L, the more options that they have, the more empowered that they feel in that decision, and the more that they're able to make a business decision that works best for them and for the investment property and the ROI that they're looking for.
Okay, that all makes sense. And now that I think this kind of get paints a decent picture of what's happening on a big scale, right? As far as what's going on in the insurance industry. So let's dive into something a little bit specific to what the individual person is doing and should be doing, right? Because I know those
Sure.
are like two different things, right? So what are you seeing people doing ideally in the Los Angeles area, but if you want to talk on a big scale, that's fine as well. But we'll start with the homeowners and then we'll go to investors. What are you seeing them doing with their insurance policies?
Yeah, the first one I would say is broadly applicable to everybody. Doesn't matter
Mhm.
if you're in a suburb of Columbus or you're right downtown LA. Doesn't matter if you're a homeowner or a real estate investor. I would say the biggest thing that's come about really in the last couple of years with inflation on materials, building costs, timeline to
Mhm.
build or rebuild is checking what's known as coverage A or your property limit, right? What is the total amount that you're actually insuring this property for in the event that the worst happens? So let's say tragically the entire house burns down. We have clients that the Christmas lights, right, catch on fire. The very classic story that people hope never happens to them. They leave the Christmas lights on or holiday lights on at night and something sparks, takes the whole place down. It's tragic. But what's more tragic in those instances is where you might have bought the house 10 years ago. You haven't increased that limit in 10 years. So where you might have been able to broadly across the country, certainly not in LA anytime in the near past, but you might have been able to get by with rebuilding for $85 a square foot, right? There's
Mhm.
not a place in the country that you can rebuild for even basic builder grade at less than probably $140 a square foot. Certainly not in LA or in Southern California. And so the
Right.
challenge there is that in the event the worst happens, you're going to pull out that policy. You're going to look at it and say, wow, I, I don't have enough. I don't have enough to rebuild here, right? And so that's the first thing that I would always tell people across the board, right? Make sure that if you are actually paying for coverage, make sure that you have enough coverage to actually get to the point of rebuilding your property, rebuilding the home that your family's in, or the business asset that you've built.
Yeah, that was a really big deal in Orange County with the Laguna fires. Is like I met someone who lost his home to the fires. He was like 500 or 600,000 below what he actually needed for coverage.
Yeah.
And that obviously is going to be dependent on mortgages and all that, but like a lot that's why we're seeing lots for sale from the Palisades fire, Altadena. It's just forget is it worth building? It's just like I don't have enough coverage and I don't have the cash, or I have the cash, but it doesn't make sense to do it here. I'd rather
Yeah.
just go buy another place somewhere else and
And
just sell the land.
and that's the judgment call, right? And
Right.
a good agent should be walking you through that, right? At the end of the day, an agent doesn't know how to accurately value your property. They don't know if you imported a bunch of Italian marble for your home or where you got
Right.
linoleum tile. They don't necessarily know that, but you want to be able to run through that exercise with your agent to be able to say, hey, listen, if the worst happens, right? Not only do you have to rebuild, you kind of have to remediate that property that folks that have had wildfire impacts are experiencing that now. They got to clear all that stuff out, and that costs money. And so that's the biggest tragedy. And in the event that you have a mortgage, what makes this worse is that in the event that you have a mortgage on the property and you don't have enough to rebuild, the lender might just say, hey, listen, this sounds ugly. I just want my check for my portion. Let's say lender still owns 60, 70% of the property. They might just take their prorated amount for that. And you're left out with this burned out piece of land and maybe a check for 100 grand, 200 grand, right? Nothing close to what you need to actually rebuild that property. And, that is the biggest thing, right? Like there's certainly specific coverages and certain actions that people can take to reduce their likelihood of claims and stuff that they can control. You can't control if a fire is going to come down the path. Making sure that if you're spending the money on an annual basis for an insurance policy, make sure that you've got enough to actually rebuild your home.
Yeah. And the other thing I've noticed, and I actually heard this was actually part of the problem, was people are pulling out, they were using their insurance for the smallest things. And like I know someone's, oh yeah, my refrigerator leaked and I use the insurance to replace the floors. That's also part of the reason why our premiums are so high.
You're absolutely right. It's a decision point, right? I never
Right.
fault somebody that
You're
has
paying into
insurance and
it.
wants to be able to use it. But yeah, at the end of the day, everybody's premium is going to go up, as well as yours, right? If you're the one that wants to make that claim for the flooring, especially for real estate investors, it comes down to a judgment call. Do you want the $1,000 deductible because you're going to use it on everything? Recognizing that your premium is probably going to go up by an equal amount, but maybe you just want to delay that? Or are you somebody that says, you know what, take care of everything myself? I'm grabbing insurance in the event the worst happens, right? The roof gets ripped off in a tornado, or the hurricane comes through, the wildfire, or there's a fire in the property. I want a $10,000 deductible, right? We have clients sometimes that want a $50,000 deductible because they're willing to take that risk and they're never going to make the small claims.
I am so happy you said that. Like you have no idea because I do that. I have a $10,000 deductible because I'm like, really, if it's $1,000 and the work is 2,000, are you really gonna take the hit on your insurance for $1,000?
Yep.
No, that's ridiculous. And then I'm not hearing, it happened to me. Every time I'm calling for insurance on a new property I'm buying, they say, have you ever pulled a claim on any of your other properties?
Yep.
Like you're getting dinged to buy a new property, you're getting dinged when you sell your property, and there was a claim. It's almost like you only want to use it for the major events.
And that's really what insurance should be for. I think that's sometimes the disconnect around insurance. You can go down to a $500 deductible sometimes,
Yeah.
right? There's certainly that option. Maybe condo unit owners, right? You're getting walls
Mm.
in coverage. Maybe $500 makes sense for you. But at the end of the day, there is something that's run on the back end of every insurance policy. It's called a CLUE report, right? CLUE,
Mhm.
and that's a loss underwriting evaluation. It's going to pull everything that's associated with you and the assets that you own. And I think for us, what we do a little bit differently is I want to really take into account the way that a real estate investor operates. I don't
Mhm.
think that the way that the traditional insurance market looks at you as a risk or the property that you're buying, if you walk into your local, State Farm office today, they're still going to say, hey, square footage, year built, number of units, right? That's table stakes information. What I want to know is who's the lender on the deal? What are you thinking about potentially cash flowing on this asset? What are some of the things that I can glean from the fact that maybe you want a $10,000 deductible? You're somebody that says, hey, that a $10,000, maybe a $20,000 claim, 30, 40, $50,000 claim, that makes sense, right? You're paying into that. But otherwise, you're not going to be the type of client that's going to continue to utilize your insurance coverage. Those are the things that we want to also look at. Those are the folks that we want to try and work with, because I think it changes the perception, especially for real estate
Mhm.
investors that are so tied to their P&L, around how can we continue to work with clients that really want to do right by the properties that they own, take care of what they can take care of. And then insurance is always there and it's affordable, but it's there for the worst case scenarios that come about.
So it's really about just changing the narrative on what is the purpose of insurance for both investor or homeowner. It's look, this is not to replace flooring at $4 a square foot. It's no, if your house is gone, that's when it comes in. It's almost like life insurance. It's for worst case scenario when you die.
Yeah,
No.
life insurance is a great example, right? Like most people do not use their car insurance when the side of the car gets scratched. You get a basic scratch, something happens, and shit, this is hopefully it's not a day old car. That's
Right.
painful. That's the way that we think about insurance, and people can ultimately always use it, right? We give a varying levels of deductibles. I see insurance as something that can be able to support the different goals that you have, whether you're a homeowner and you want just that peace of mind protection, or you're a real estate investor and this line item needs to be able to fit within, the profitability calculation of your investment asset. And so with that in mind, what's very cool in the insurance space as technology has come about is that you're starting to see new and novel insurance products, right? One of the ones that we launched recently was it's a tenant damage product, right? Their renter's insurance isn't going to cover the fact that they threw a towel down the toilet, right? For whatever reason, tenants. I had a lot of tenants in my life, and now the toilet's backing up, or there was a kitchen fire, right? Somebody threw something on the stove and walked away. There's tenant damage coverage now that you can buy on a per unit basis, where you can utilize that normally a very low $0 or $100 deductible for up to $100,000 or $200,000 in tenant caused damage. But then you can utilize that for those situations that come up. And then you don't have to file claims on that insurance coverage, that primary $10,000 deductible insurance that's going to be there for those really big incidents that come up, like structural damage, roof gets blown off, maybe you need to replace the shingles that are up there, maybe the place burns down, unfortunately. And so that's what I'm excited about in the insurance space. There's some of these new novel insurance products. There's skip rent insurance that's out there. There's eviction coverage that's coming out there. So interesting niche insurance products that are coming about where you don't have to utilize that primary coverage. You don't have to worry about this claim showing up in one of those reports, and be able to utilize that, satisfy your loan requirements, but also find a product, much like maybe a home warranty or otherwise, that's going to be able to help you out in some of those other circumstances.
Which makes sense, right? It's almost like very niche, like add-ons. So
Correct.
then, but you mentioned, okay, what if a tenant basically does damage? Where does their tenant insurance come in, right? When they get
Yeah,
the
it's
renter's insurance?
one of the surprising things for a lot of landlords is that most renters insurance, I would say even 90% of the renters insurance providers that are out there, they don't cover damage to the asset. And so if your tenant, starts frying something on the stove, right? Walks away, you've got a fire, somebody has something in the oven that catches on fire and either the whole place or maybe the kitchen burns down, they might file a claim, right, with their renters insurance company, but that company is actually subrogating it out to your primary property insurance, right? Most renters insurance only covers their contents. The way I like to describe it is that
Mm.
if you were to turn their apartment unit upside down, everything that falls, right, that's covered by renters insurance. So the walls, the appliances, anything that's really attached to that unit, that typically always falls on the actual owners and the owner's policy, right? And so that's where there's some things that happen in the background with insurance, sometimes without the owner really even being able to pay attention to it. A lot of those tenant coverages don't actually cover damage to the asset that the tenant may have caused themselves.
Are there renter insurance policies that would cover damage?
There are a couple. We work with a lot of partners that we do a lot of the property and liability, so that actual asset, everything that is actually
Yeah.
stuck in and secured to the ground, as well as some tenant damage offerings that are paired with that. But there are certainly finally some renters insurance programs that are coming out that are saying, hey, listen, your landlord requires you to have renters insurance, and it needs to be the renters insurance that also covers some of their interest in any damage you might cause. And for a couple bucks extra a month, it's a no-brainer for a lot of tenants to be signing up for that type of coverage.
Yeah, I asked because like I was recently asked to write an article for a big like apartment association. And so we're talking about what are things we have to put in our addendums to protect us. And it's typically leases just say, oh, we just need coverage up to $100,000, but it doesn't go into specifics.
Yeah,
And so now my 6-page addendum just turned to 7 pages thanks to you. But you're right, like we have to be very specific as to what we want.
yeah, yeah. I
Um,
what I've started to see primarily from property managers and from owners is to provide their tenants with a litany of different approved providers, right? So you're not necessarily bucketing them
mm,
into one specific partner. You certainly can. And there's property management software, right? If you use an AppFolio or a RealPage or otherwise that are out there, they have embedded options like this. So in the event
mhm.
that your tenant, as they're going through the renter or the application process, leasing process, or onboarding, they can upload a copy of compliant coverage, or they can buy a policy directly through AppFolio. Or I've also seen that inside of that addendum and during that kind of move in process, landlords and property managers are just now at this point giving their tenants a list of providers and saying, hey, listen, I don't care which one you go with. but these are the 5 or 10 or 15 that are actually approved because they also combine tenant damage protection inside the cost of that insurance.
Got it. But you still have to be specific as to what kind of insurance you want.
Correct. Yeah. Now, fortunately, with those different carriers and those options, they do offer that, right? That's the benefit of some of those. There's a lot of carriers that haven't come around to including that inside of their
Sure.
policy yet. But there's definitely probably about a dozen or so now that do offer that type of coverage as a package to the renter's coverage as well.
Got it. Which makes sense. Yeah, I'm just like we're constantly updating our
Oh
standard
yeah.
operating procedures. So it's every year it's something new. So I totally get that. And then you mentioned about liability coverage, and that's mostly on the owner, right? So slip and fall, whatever. I know like I have an umbrella policy for $500 a year for $1 million coverage, which I probably shouldn't be announcing. Regardless, can you go into the difference between the two? Because a lot of people are like, oh, should
Sure.
I have the LLC? But it's like, or do you just get the umbrella insurance, that sort of deal?
Yeah, it really depends. I would say, let me back up, that broadly speaking, everybody should get an umbrella, right?
Yeah.
I don't care if you're a homeowner or whatever, when you're not a real estate investor, it's fairly affordable, especially if you're pairing it with your home or with your auto insurance. Most of those carriers will throw in an extra 500,000 or $1 million in umbrella coverage for fairly cheap, right? Like that feels to me an absolute no-brainer and kind of the litigious society that we live in, right? Every time you're driving down the highway and you see a billboard that says, "Hey, were you injured in an accident?" That is an opportunity for your umbrella to come into play. And I've seen time and again, sometimes, unfortunately, people's limits are extinguished. So umbrella coverage is really almost what it sounds like. It's in excess of whatever your current general liability limits are. So, what I would recommend to all of your listeners, especially because the price difference is fairly negligible, get $1 million in general liability coverage. In this day and age, even legal expenses for somebody to get to court or to go through these types of process or arbitration, whatever it is, you're going to rack up a lot of legal bills, right? Getting that $1 million in coverage, right? We in one of our programs we offer it for as low as I think $80 or $90 for the year for $1 million in
Hmm.
coverage. That's a no-brainer, right? And so that umbrella policy is just in excess of you extinguishing those limits. So you can buy a 1, 2, 5 million, $3 million umbrella policy. That's just going to be there to support and bolster the existing policy that you already have. Now, at least in terms of whether or not to throw it in an LLC, I never discourage anyone from doing that. It does create
Right.
that extra barrier, right? And that legal protection. It doesn't always protect somebody from the opposite attorney looking for additional assets that they might be able to go after. But at least there was an attempt to try to separate out legally these assets from something that's in your own personal name. And so I never discourage somebody from doing that. There's obviously always like tax implications and things to talk to your CPA and your attorney about, but all of our assets are inside of an LLC.
Yeah. It was interesting because I interviewed someone else for the podcast and it's all about perception. So let's say you're fresh out of medical school and you're like, you know what? I have all this medical debt or school debt, but I'm going to buy that nice BMW. Next thing you know, you get hit. Someone sees you coming out of a BMW wearing the white medical coat. Ooh, a doctor. Like
Yep.
you may be broke as all hell, but they don't know that, and they're
Yep.
gonna try to get everything. And then to your point, you see all these billboards, and that's really where I had another attorney tell me that's really where we started seeing more of these lawsuits. It's like
Yeah.
when attorneys were able to start advertising, which there's pros and cons to it. We shouldn't be in a litigious society, but you can also make the argument that there are legitimate cases and people should know what their rights are. So I see both
Totally.
sides to it. But it's like no matter what, we got our umbrella policy years ago. It was when I think I got my second property, is when we
Hmm.
got it. When we're just starting to be like, okay, we now have two properties, we have cars, we're in LA, anything like getting there's Rolls Royces driving down the road.
Yep.
You never know. And I actually met someone years ago. It was a potential listing, and I'm walking through, and he was bragging about how he made his money, and he made his money by suing people.
Yeah.
He wasn't an attorney. He just, oh yeah, I sued this person for this. I sued this company for that, as if it was something to be proud of. And I'm
Yeah.
in my mind, I'm like, we're not doing business together. Zero chance. We're gonna do business together.
Yeah. It's to your point, right? Like there's a delicate balance there. right?
Yeah.
Like you want these available services. We live in a free society. If you want to buy
Right.
every billboard on the side of the road, so be it. At the same time, we've seen circumstances where very clearly there was somebody trespassing on a property at an apartment complex or at a commercial site, right? They got hurt there, but nobody invited them to private property. But the owner still receives a letter from the attorney that says, "Hey, my client's got all of these injuries." And you're like, "Yeah, but he wasn't supposed to be there. Had he spent supposed to be there, then he would have known that there was a tripping hazard. There would have been this, there would have been that." But you're still spending money on an attorney to
Oh
reply
yeah.
to that. And think that there is such a delicate balance, and I don't fault people for being entrepreneurial after you get your law degree, but it does create an interesting dynamic about how does society have to respond to that. And for a couple extra $100 a year, right, you're going to sleep better at night as a real
Yeah.
estate investor, as an individual, knowing that, hey, I've got an extra $1 million in coverage for a couple $100 extra a year. Like that's a no brainer, right? And that's what we really coach for all of our, especially our real estate investors. I know real estate investors that are finicky about every single thing about their assets. I also know some that say, hey, I got a professional property manager. They take care of everything, right? I don't want to be involved at all. I want my check in the mail on a monthly basis or my ACH deposited on a monthly basis, and that's it. And so, what we always counsel our clients, especially with insurance, is what's going to help you sleep better at night? Is it your $10,000 deductible? You'll be able to cash flow a little bit more on these assets, or do you need to go to 1,000 because just in case that thing happens? Those are the pieces that to really think through, especially as it relates to, what is the P&L? What are the goals that you have? And I think that's always the delineation and the difference between a homeowner, where this is your intrinsic home, this is where your family lives. There's a lot of sentimental value in this place that you call home, versus this asset that's driving value for you as a business owner, and how you can take a little bit more of an objective view on what are the goals you have for that asset and how do you want to meet those goals with the available tools that you have at your disposal.
So, what are some of, as like a real estate investor, especially here in LA, because it's actually getting harder to find the insurance and all that. What are some things that they probably don't know or that they should be looking into for their when they're reviewing these policies? Because some of it gets complicated.
Yeah, one of the fun ones lately. I don't endorse it, but certainly an interesting route. Right, throw both policies into ChatGPT and just tell me how are they similar and different? What are the
Hmm.
things that coverage A covers that policy B does not? Interesting experiment. We've had a lot of clients that have started to do that, and we've done it internally just to see how that goes. So that's an interesting way of using the new wave of what's going out to
Yeah.
start to get educated on those policies. But more broadly, we're a big supporter and a big proponent of the independent agent community. I think if you're a real estate investor, find an insurance agent that knows and understands this space, right? There are dozens, I'm sure in the LA area, dozens of insurance agents that are real estate investors themselves.
Mm.
Find somebody that knows and understands this space. Find somebody that doesn't just do the one-off policy, maybe one a month or two a month or something. You want to find that person that's really engaged in this market, because those are the people that are going to be able to help you back into what those goals are. And in fact, as well, are going to have access to a lot of carrier markets that your broader independent agent may not have. So we work with a ton of independent agents around the country. We give access to those agents to be able to write the OE policy, but more often than not, we're really only working with folks that can demonstrate that they have a clientele base of real estate investors. We don't necessarily always want the agent that might send us, one quote a month. We really
Mhm.
want to go deep with our clientele to be able to continue to build insurance products that meet their needs. And so as a result, we're only working with a certain select number of agents. And so I want you as a real estate investor to get connected with those folks, because they are also getting access to a select breed, I would say, of specialty insurance carriers, whatever that might be, right? Maybe you're an aviation enthusiast, you need to cover a plane. Maybe you're into shipping, or maybe you've got small businesses, right? Whatever that might be, you want to find the niche insurance agent that really covers that space, because they're going to have access to a significantly higher number of potential markets or available insurance carriers to go to that are going to get you the best price and the best coverage depending on what your needs are.
Now you brought up something. There's insurance brokers, and then you have the companies, right? Nationwide, State
Mm.
Farm, whatever. What's the difference between the two? Because not a lot of people know that there's a difference.
Yeah, agent and broker are fairly synonymous. Some states have
Okay.
the legal definition between the two, but effectively, your insurance agent and your insurance broker, they are going out to a multitude or a number of different insurance carriers, right? You come to me and
Hmm.
you say, "Hey, Aaron, I'm buying a I'm buying a mixed use building, right? It's a 3 flat with a nail salon in the first floor. I might have access to Liberty and Nationwide and State Auto or some of the other carriers that might exist out there, or Travelers that might be out there in the market. And I'm working on your behalf to try and find an available carrier who might be interested in some of that business. Those carriers, depending on who they are, Liberty Mutual, Allstate, State Farm, they have what's known as captive agents. So those agents are only working on behalf of that specific carrier. And that has a lot of benefits to it as well, that provides access to a multitude of products that can all be bundled and get you better pricing sometimes because you're consolidating everything with one specific diversified insurance carrier. So there isn't necessarily a good or a bad option, so long as that person that you're working with knows and understands the real estate investor segment. They're going to understand what your needs are because hopefully they're living them themselves and can help you craft a policy and add the endorsements and the unique coverages that are going to really be able to cover your asset in the event that, again, the worst comes up.
What I always like to do is like, what questions should you ask them? Because, for example, when I've met with potential clients on the buying and selling side, sometimes like I'm interviewing other agents, I'm like, okay, make sure to ask them A, B, and C.
Sure.
So in your world, what should they be asking?
The first thing, if you're a real estate investor, I would ask them how many landlord policies they write on a monthly basis, right? That's the first thing. You want somebody that's doing more than just a couple, right? Because that, again, is going to demonstrate to the market or somebody like Obie that we're going to give them access to our specific product, right? And we're still operating in the California market. We give access to California agents. But again, we want to go deep with the partners that we have. So that's the first thing. The second thing is really saying, hey, what do you recommend and how much do you think I can rebuild this property for? That's an interesting, I think, litmus test for insurance agents who may or may not really know your market or your part of the neighborhood or your specific home or what that looks like. You, as the property investor, should have a pretty good general idea on what you might be able to rebuild it for, what construction cost in that area is. But you want to make sure that agent has a good idea of that area. And I'll tell you why else. Depending on how old that property is, depending on where it's at, maybe inside of LA or LA County, there might be certain ordinances that have been updated recently that a home built 60, 70, 80 years ago may be grandfathered into. And so one of the areas that's fairly overlooked in the insurance market right now as an endorsement, especially as the age of home continues to grow, is what's known as ordinance and law coverage. This is something that's basically saying, hey, listen, if you got grandfathered in with a certain type of electrical wiring, you got grandfathered in with a certain connection to the city water or the type of piping and plumbing that you have in this property, in the event that you have a loss that impacts that in any way, not only are you going to have to rebuild that, but you're also now going to have to rebuild it to current today's code and standards. And so something like ordinance and law coverage is going to be able to cover that excess cost on what it now takes to update the aluminum wiring, right? Or update the lead piping or whatever that might be in that property. And the more knowledgeable the insurance agent that you have, the more they're going to be able to point to certain specifics that might impact you as a real estate investor when you're buying an asset in a certain location.
So a great example of that, whether you're an investor or not, is California requires solar panels on all new construction. So that's an immediate 20 to 30 grand worth of work that your current home may not have. That's been my biggest concern with these fires in the Palisades and in Altadena is like these homes were built early 1900s, some actually in the 1800s for Altadena. It's like building codes have changed dramatically. And you're not building the same house anyways. Forget the fact that you may not be able to build the same size, which I'm sure a lot of them are going to be pissed about. But yeah, you have solar panels, you have rain barrels that, I think those are, I don't know what the going rate is. It used to be about $250 per barrel. And that's basically just for the gutter to come down to put it in a barrel because when it rains so much here in California, and then do something with the water. But it's actually in the CC&Rs. You're actually required to maintain them. A lot of people take them out, but you're not allowed to. But yeah, you're right. So your insurance policy may not, or at least when you're looking at the replacement cost, you may not be factoring in those things.
You're absolutely right. That's the biggest piece is sitting with an agent and basically looking at, all right, the core part of this policy, right? Your loss of rents coverage, your contents, your property limit, your liability limit, all of that looks great. Now let's go through like the list of specific endorsements that this carrier offers or may not offer, right? And then go through each one of them. What are the things that you actually care about? Do you care about siding matching, right? They don't make this siding anymore, right? You can add on that endorsement and basically force your insurance carrier to find like that exact type of siding or on all new siding, right? But do you care about that? Right? What are the
Mhm.
things that you actually do care about? What are the things that are going to really impact your pocketbook that, to your point, you don't want to fix yourself? Right.
Yeah.
And so sitting with an agent who knows and understands, that's the best value that you can get out of getting insurance.
Yeah, it was because I have a client. We were talking about insurance because I do these equity reviews every year with my clients, where every year we go through the value of your home, what it would rent for, appreciation rates. But I've been bringing up insurance. I'm like, look, I'm not an
Mm-hmm.
insurance agent, but it's becoming a problem. And I have clients where I remember the wife went to the husband and said, "Do we have enough coverage?" He's like, "Yeah, yes and no." But the reality is, I'm not going to use my insurance to update my landscaping. I'm not going to, if all the grass burns, I'll deal with landscaping later. I'm not going to put my money towards that.
Sure.
Right. Or maybe it's, I might just put in the most basic of finishes and just to get us moved in, and then we can always upgrade it later. Like
Sure.
you have to start pick and choosing. Now, on these policies, there's also exclusions, right?
Sure.
So here's a question that no one's been able, I've gotten like vague answers on. There's usually a pet exclusion. You can't have certain dogs on the property. In California, you can have an emotional support animal, and as a landlord, you can't deny them. What if that emotional support animal is on the exclusion list?
That is a good.
It's like crap. And I didn't expect you to have an answer. So but it's just, it's something that's I've been thinking about.
Yeah, I don't. It's a good example, right? Because most of your emotional support animals, or even just like physical support animals in some way, right,
Yeah.
that are paired with, especially like handicap or mobility challenged individuals, they're big dogs, right? You're talking a Great
Hmm.
Dane, right? Like you're talking people that are dogs that can support you in some way. I don't know, right?
Yeah, right.
That's a really interesting circumstance. I haven't known anybody to own a pit bull as an emotional support animal.
Oh yeah, it hasn't come
But
up.
yeah, German Shepherd, large breeds, Great Danes, right?
Don't knock
Really
on
big.
Scooby-Doo, by the way. Like
I
Scooby-Doo's
know, right?
fine.
I think about that. My brother had a Great Dane for a period of time, and then trained him for a double or a single amputee war vet. But one of the uses for Great Danes is they have so much power and strength in their shoulder that you can
Hmm.
go down the stairs, but basically put all of your weight like on their back, and they will be able to support you. And so it's
Oh
it's,
wow.
it's really fascinating. But I haven't looked at the list. We don't have an extensive list of like banned dog breeds. Fortunately, we haven't had a big issues with that. But yeah, I don't know.
Because
California
service
obviously.
animals, they're highly trained, right? So I'm not worried about
Sure.
the service animals, but emotional support is there's no training required. You just need a
Yeah.
doctor's note. And it's just like, yeah, the pit bull helps me with my anxiety. And
Yeah.
I get it. It's not usually the pit bull, it's usually the owners,
Yeah.
right? In terms of training and all of that. So I
Yep.
don't really fault the dogs, but yeah, it's on the exclusion list.
Yep.
And so I've been wanting to ask.
Yeah. I don't know actually.
Yeah.
That's something that's never come up.
Are you gonna call me at 3 in the morning and say, hey, I found an answer?
Yeah, I'm actually going to ask. I'm going to ask how we would end up handling that. That'll be a first actually, which doesn't happen
Yeah.
in insurance that often, but people
It's
come
gonna
up with
be
the
case
craziest
law.
claims. Yep.
Yeah, I think it has to go to court because someone's going to sue someone,
Yep.
whether it's like if I'm an owner and a tenant, because what has happened is the tenants will say, no, I don't have any pets. They move in, all of a sudden, surprise, there's a dog, but there's nothing you can do because it's an
Yeah.
emotional support animal. So I'm just waiting for somebody. I don't know if they're going to sue the insurance company or they're
Yep.
going to sue the state. Maybe it's both. And at some point, a judge is going to be like, all right, something has to change.
Yeah, there's a lot of standard language in insurance documents, especially in California. Not that you'd be surprised that yeah, you're absolutely right. Like after that happens, after the appeal and everything else, there's going to be a 3 sentence state mandated statement that you're going to have to throw in there that effectively says, hey, yeah, listen, we don't allow dog breeds. However, per
Hmm.
state code, blah blah blah, this exclusion does not apply. If
Yeah, I think that's what I think is probably going to happen is on the insurance side, you're going to say these breeds are excluded with the exception of emotional support animals.
yeah,
That's
it's
probably
it's
going to
much
be the
like
cheapest
anything.
way.
Yeah, it's much like anything, right? Like the pendulum on emotional support animals. There was an AI generated image of a woman in the check-in line to board at an airline, and it was her pet kangaroo. And the picture
Right.
was so well done, Rick, that first looked at, and then this is a whole different topic around what AI is going to do for the truth in the world. But it's like,
Right.
I actually, for a second there, was like, okay, this is a little strange and a little ridiculous, but I guess I'm not going to argue with your emotional support animal. It happens to be a kangaroo. It was leashed up and about ready to like hop on the plane. But yeah, it's the pendulum always swings one way before it swings back, and everybody says,
Uh,
you really, to your point, your lease is saying no pets, and then they come back and they say it's not a pet, it's an animal,
yeah.
it's a support
Yeah.
animal.
What
So,
I started doing was in my addendum, I say, hey, no pets are allowed. But if there is a pet, emotional support, here are the rules. So
yep,
the rules are
of
still in
course,
place because that happened to one of my clients. She flat out asked the prospective tenant, do you have pets? No. And I actually warned her ahead of time. I said, look, by the way, I checked their Instagram account. There's
they got
pictures with
pets.
a pet. But she said, no, they said they didn't. I'm like, okay, I'm just
Yep.
letting you know. All of a sudden, there's pets. And she, what can I do? We get free legal services as a realtor.
Mm.
And it's general questions, not really specific, but I'm like, hey, they claimed that there was no pet. Now they're saying there is. Is there anything you can do? He's like, what do you think the answer is? They're not normally that rude, but I also get it. I'm
Yep.
like, there's nothing you can do. He's like, exactly.
Yeah.
Understood.
Yep.
Understood. So yeah, that's something that now I put in my addendum is if there's a pet that shows up out of nowhere, here are the rules. But
Yeah.
yeah, the insurance,
That's when your addendum starts to get longer than the lease.
oh, it's ridiculous. I think between the lease and the addendum and disclose, it's got to be like 75 pages. Now, granted, part of that is like handbooks that we're supposed to provide. So if you exclude the handbook, it's probably like 25. And the problem is, the longer it is, the less people read. And it's not really a problem if you're the one providing it, but like on the opposite end, it's yeah. Like loan documents, even insurance documents, there's so many
Yep.
things to read. It's just give me the front page with a summary.
And sign here. And that's what most people do.
Yeah, what I started doing when I was buying investment properties is like I lock in the insurance, but then I shop around after the fact.
Yep. Sure.
Right? Because you only have so many days, and I want to make sure the lender's satisfied. So it's like, look, let's do this, let's get it in, and then I shop around. So like in a
Yep.
few months, and I'll reach out to you, like I'll be shopping around, right? Because I had
Sure.
to lock in
Yep.
one with a 10% deductible.
Yep.
Yeah, it was wild. Wild. But that's where we are. Okay, Aaron, this has been like amazing. Is there anything else that people should be aware of, especially in like the LA market when it comes to homeowners insurance for investors and like homeowners alike?
No, we covered a lot of it, right? The biggest thing I can leave with your listeners is if you're paying for insurance, make sure you get enough coverage to actually cover what you're paying for.
Yeah. That sounds so simple, but it's so true.
So many people get to that checkout their page and they're like, what? I can just slide the slider down another 50 grand, right? I'll save the $10. I'll save the 15 bucks. Don't save the money, right? I'm not even saying this selfishly because we run an insurance company, right? Cover yourself on the core limits that are going to protect your interests at the end of the day. Totally worth it.
Totally agree. Now, Aaron, how can people get a hold of you? How can they get a hold of Obie?
Yeah, best ways are they can go directly to the website, obieinsurance.com. That's OBIE insurance.com. Or I'm attached to my email. So it's Aaron at obieinsurance.com.
Very cool. All right. Well, thank you so much, Aaron, for being here. Thank you, everybody, for listening or watching. And I will talk to you guys next week. Thanks for tuning in to The Key to the City of Angels. I hope you found today's episode helpful as you navigate the world of Los Angeles real estate. Whether you're looking to buy your first home, expand your investment portfolio, or sell in this competitive market, I'm here to help you succeed. Let's connect. Visit my website or follow me on social media to learn more about how I can help you achieve your real estate goals. And if you're ready to take the next step, don't hesitate to reach out. I'd love to work with you. If you've enjoyed this episode, be sure to subscribe, leave a review, and share it with someone who might benefit. Together, let's unlock your potential and make your real estate dreams a reality.